It is my pleasure to introduce Boris Wertz. Boris is the founder and general partner of Version 1 Ventures, which is an early stage fund backing mission-driven founders, including a handful of alumni of this program. Prior to founding Version 1, Boris was the COO of Abe Books, which was acquired by Amazon. Boris is also a C100 charter member based in Vancouver. Boris, thank you so much for contributing to today's discussion and for helping us have a great conversation with our e-commerce founders. I will hand it off to you.
Hey, thanks for the introduction and thanks for the invite. Super excited to be moderating this first panel around e-commerce. And we'll start with the four founders introducing their companies and giving a little bit of background, why they started their companies, where they want to take them. Almost like the classical VC pitch, how we start a conversation with founders. So why don't you start with Braden first, and Dan, Robert, and Saba, and then I'll ask questions in between. So Braden, go ahead.
Awesome. Hey guys, stoked to be here. I'm trying not to shiver. I'm trying to be as optimistic about the sun that we have in Vancouver. So if I am getting cold, I might go inside, and there's also some construction going on across from me. So if it gets too loud, I also will bump inside. Based in Vancouver, I'm the co-founder and CEO of Casca Designs. We are a footwear company that has integrated 3D printing into the traditional shoe manufacturing process. So two and a half, 3 years ago, my co-founder and I felt like, you know, we saw this pinnacle of athleisure happening. Everyone's starting to wear the same clothes everywhere they were going. And we just felt like the shoes just weren't keeping pace. And you had people that were wearing Nike because they were really comfortable. And then you had people that were wearing things like Converse, Allbirds, Vans. The problem being there was a lack of support. And then, you know, we also saw people wearing really well-designed designed shoes like common projects. So we wanted to take a step back and sort of figure out how we could combine all those different pieces while keeping a really focused effort on function. So the first thing that we did was we actually worked with an orthotic lab and figured out how you support the foot. And through that process, we learned that everyone's feet are incredibly unique. Not only are my feet and your feet unique, but even your right foot and left foot can be unique. And so, you know, we took another step back and looked at how technology was being used. And, you know, we found that there were just a ton of problems in the footwear space. The supply chain was crazy. It takes 4 months from the time you place an order to the time you've actually received product. 2/3 of the carbon for footwear manufacturing from footwear actually comes from manufacturing. So a lot of companies have kind of looked at using sustainable materials, but the problem there right now is that you end up needing to buy shoes twice as often because oftentimes they're not as durable. And then we also saw that, you know, the unit economics for some of these advanced manufacturing techniques were actually in a way that you can make money from it profitably. And combined with the fact that everyone now has smartphones. So, you know, we felt like there was this amazing opportunity to start this process to a world where everything is on demand, custom, and local. And so we now have this 3D printing technology. You can take 3 photos of your foot. We turn that into a 10,000 point cloud map. We can then assess how your foot is actually shaped and create a insole, or for now it's just the insole. The long-term goal is to do the entire shoe and actually fit that to your foot. So that's sort of what Casca is about. The last 6 months has been super interesting, and I'm really excited to talk more about that later on this panel. The first 6 months, we closed our seed round, back in June or May of last year. And the first 6 months was really focused on integrating all of this technology that we have into our shoes and figuring that process out. We launched with the technology and the brand in January. We're growing at a pretty good rate, and then COVID hit in March. And I know for sure I thought it was going to be, you know, a lot of trouble. And obviously the e-commerce, I think, ended up getting a big lift from that. So we ended up running out of inventory in June, which has been interesting. And I would say, you know, the first big accomplishment that we had was integrating the tech, which was great. The second big accomplishment was selling through everything. And now I can say that my biggest accomplishment was figuring out a negative cash conversion cycle so that we can continue scaling.
Okay, quick
Yeah.
follow-up question to your business. How did you decide about kind of licensing technology versus doing the insole versus the whole shoe? Like, you know, in the value chain, how did you decide for one versus the other?
Yeah, so I think my co-founder and I have a very strong, we love brands. And I think that to get customers to this point of understanding where the technology is going, they have to do it through a brand. And so showing what your brand actually is, like having that focused messaging and that sort of like full ecosystem in one brand, I think is how we're going to bridge that gap from traditional manufacturing where everyone's used to having one size shoe to the point where you're going through the process of actually having to scan your foot and like buying into that future. So that was why we decided that we wanted to focus on doing it as a brand and not just licensing the technology.
Makes sense. Perfect. Thank you.
Yeah.
Let's go to Dan as our next one.
Dan, you're muted.
That might be helpful. Thanks. Hi, everyone. Great to see so many familiar faces. This is great. My name is Dan. I'm the CEO of Clutch. We are an online platform for car retail based out of Toronto. Basically, what we do is quite simple. We sell cars online. Our tagline is buy great cars online. Pretty straightforward concept. What we saw in Canada was an opportunity to create a digital platform for car buying and selling. I think you've seen in other parts of the world, like the US, the UK, and even Latin America, there's a number of startups that have built relatively large online car platforms. Carvana is a good example in the US, now a $40 billion public company after 8 years in existence. In the UK, Cars Do just raised $300 million at a $2.5 billion valuation. The crazy thing about Canada, and I think a lot of folks here on this call are Canadian, if you come up here and you think about a brand that resonates with the consumer around car retail, there's no AutoNation, there's no CarMax. All you can really think about is your local dealership, or you go online to an Auto Trader or a Kijiji and you find a stranger and you meet them in a Tim Hortons parking lot and try to buy the car off them. So the alternatives for the Canadian consumer are few and far between. There's really nothing aside from going to a dealership or really finding that stranger online. And we're trying to fill that gap, not only in the online space, but one that exists even in the brick and mortar space. Our platform is entirely online, but there is no equivalent of a CarMax or an AutoNation here in Canada. It is a massive, massive industry. The used car market alone in Canada is 40 billion. Then you start adding all the adjacent, financing and warranty, and you start looking at a $200 billion market, which has a ton of runway. So we started about 3 years ago. We are now in 2 markets, in Ontario and Atlantic Canada. We're excited about building a brand that goes coast to coast when it comes to car retail and building something that resonates with the consumer around trust and transparency. I think 2 things that the car industry has been lacking in the past. There was a recent Gallup poll that ranked all of the professions from the most ethical and honest to the least ethical and honest. Number 1 was nurses, and the last one was car salesperson. So I think we've got an incredibly attractive opportunity when it comes to disrupting an industry that's been so archaic and just fraught with, I would say, unethical behavior and frankly some criminal behavior. So we're trying to do better for the consumer, provide folks with just a transparent and more trusted way to buy a car in Canada.
And Dan, thank you for that. Tell us a little bit, kind of, where do you get your supply from? Like who do you work with? Like the OEMs, existing car dealers?
Yeah, so we ultimately have a managed marketplace model. So I think in any marketplace business, you need to have one side of the equation that scales really quickly. For us, that's the supply side. We acquire 65% of our supply through auction. We also have relationships with fleets like Avis and Enterprise, as well as OEMs, so large manufacturers as well, in addition to private purchases. So there's some inventory that we'll get kind of from the public, as well as trade-ins. So we have a pretty diversified set of supply, but the bulk comes from auction.
Okay, great. let's go next to Robert. One more Vancouver on the call.
Yeah, definitely. Great. Thank you, Boris. So yeah, I'm Robert, and I'm co-founder and CEO of Freshline. So the company was previously called Coastline, but during the pandemic, we pivoted to our current model. So what we do is we build software that enables wholesalers to run and manage their operations in an automated and seamless way. Our mission is ultimately to redefine perishable operations for food wholesalers. And really what we're doing now is what we view as being an iteration from what we were building with Coastline. And Coastline basically started 3.5 years ago and ran up to March of 2020. And what that was really a marketplace made for seafood, particularly for fish farms and fisheries to connect directly with restaurants and retail. And we did that basically on a global level. So we were connecting fish farms in southern Japan to restaurants out in Toronto and Vancouver, and we're building that marketplace up. When the pandemic happened, our business in particular was affected with the restaurant industry, and we made the determination that the restaurant market would not recover to the level that it had been pre-pandemic, and we basically made the call to bet on the thesis that we made with Coastline and really double down on trying to increase the efficiency in the food supply chain, which ultimately led to us building what we have today with Freshline. And ultimately, a bit of my background, I actually grew up in Eastern Canada, have a family who's been in the seafood industry for about 5 generations. So we really got exposed to a lot of the inefficiency in the food supply chain just by me going back and visiting family. And, ultimately what we ended up seeing was a lot of trading of hands for products, basically getting from one part of the world in order to feed another part of the world. And what we really built with Freshline is a suite of features that basically allow wholesalers to run their warehouse more efficiently, taken from a lot of the learnings that we developed with Coastline in the beginning. So it's a bit about me and what we're building now with Freshline.
Let's just thank you for that, Robert. Just quickly, like how quickly did you decide on the pivot? Like how clear was it? Like within weeks, days, month? Like what was the timeline?
Yeah, so we basically the second week of March, we decided that we wouldn't go back into the office. And by the third week of March, we made the determination that the restaurant market would be permanently affected. And through the course of April, we ran a set of experiments that we felt would be fitting to kind of the new world order, if you will. And by May, we had really narrowed down to our current model and we started building.
Cool. That's a good, quick turnaround. Obviously necessary given the state of affairs, but never easy to pivot that quickly. And it looks like you've done a great job.
Thank you.
Saba, last but not least, please introduce yourself and what you're working on and why you're doing it.
Sure. Good morning, everyone. I'm Saba, CEO and founder at Spocket, based in Vancouver. I'll start giving a little bit of intro about myself. I'm originally Iranian, moved to Canada 9 years ago to go to UBC. I graduated in 2015. The goal was to study medicine, but I got into technology my last year in school, fell in love with it. In 2017, I started getting into e-commerce and wanted to build my own e-commerce store and sell things direct to consumer, but I just didn't have any product to sell. So what I did, I reached out to almost 400 suppliers on Etsy.com at that time and told them that, hey, give me the information of your products. I will list it on my store. I sell them for you. Whenever I sell them, I'll send you the orders and you ship it directly to my consumer, to the people that purchase the product. We couldn't make it work. Vast majority rejected because there was a lot of manual process in working with those suppliers. So that was the time that I thought of like building this software, a marketplace to to help myself out to build my own e-commerce store. So what I did in about like 4 or 5 weeks, hired like 2 co-op students from university, UBC. We built this marketplace. From one side, we started onboarding suppliers, local suppliers based in US and Europe. We vet them, negotiate discount with them, and imported the products to our marketplace. From the other side, made it super easy and pretty much fully automated for ourselves to push these products on our stores on Shopify and start selling those. And we automated everything from real-time inventory update to order processing. So as soon as we launched it, we launched our app on Shopify initially. Very quickly, in about 2 months, we got almost 400 people actively using it. And that's the time that we closed our pre-seed round. 2 months after, we got into Techstars Seattle program from January till April 2018. 2 months after, we closed our seed round. And since then, we've been just growing the team. We're around like 50 people now, very profitable. But just again, to mention what we do, we basically online dropshipping marketplace, and we basically enabling online retailers to supply their store with products every day using a model that's called dropshipping, which that means that they don't need to hold inventory and doesn't have much upfront cost for them.
Thank you. And are you in the meantime on other marketplaces as well, or you still focus on the Shopify ecosystem?
No, great question. So we started with Shopify, but we launched partnership with Wix, WooCommerce, BigCommerce. Our partnership with Squarespace, Ecwid, and Alibaba will go live in the next 3 months. But we started the conversation with Facebook and Instagram checkout as well. We want to get into social in the Q1.
Great, perfect. Hey, I appreciate everybody's introduction of their companies. You know, as you can see, we have a very wide range of companies here, from direct to consumer to platforms to marketplaces. And it's going to be a fun discussion. The first thing I wanted to focus on was a little bit the theme that we've already got discussed here around COVID. And you know, I think everybody was in a little bit of a shock in mid-March to end of March when it first hit. But since then, we have seen an incredible acceleration of digitization across the board. And especially one of the major beneficiaries has been e-commerce. And I would love to hear a little bit from everybody their experiences. And you know, some e-commerce companies that have retail footprints certainly didn't benefit that much from it and actually suffered quite a bit. So it has not always been positive, but I would love to hear a little bit the experiences from everybody around what happened in the last 6 months for them, and secondly, also where they see kind of the opportunities going forward. Are we going back to normal? You know, kind of what has changed for forever? What will go back to previous life? So perhaps Robert, do you want to start? I mean, you had the kind of the most traumatic experience in terms of having to pivot.
Yeah, definitely. So I mean, I think in our view, there's a lot of things that are going to permanently change, and a few that will stay the same. But I think most notably in food, from our perspective, online grocery is going to grow dramatically. It already has grown dramatically. It will continue growing dramatically for the length of the pandemic in our minds. And you know, I think that is a huge plus for North America, just in terms of catching up with the rest of the world. But I think the downside of the pandemic, which I think I mentioned in my initial pitch a bit, was the restaurant industry. So in North America, it looks like between 50 and 70%, depending on what poll you're reading, of the restaurants are going to close permanently. And I think when we look at what the recovery will look like in the industry, I think both my co-founder and I were skeptical enough that we ended up making the pivot that we did. So I think there's those two factors that are really coming into the retail market, I guess, that are probably going to change the landscape of what, you know, streets look like in downtown cores all over North America.
And just talking a little bit more about the pivot, like going from a pretty much B2B to a B2C model, like completely different talents and capabilities that you have to acquire pretty much overnight. Like, was that pretty smooth or?
Yeah, I mean, it's trial by fire, but you know, it's a willful fire, and I think you know, we've been able to learn quite a bit just by virtue of being very close to the supply side of the industry already. So we were really basically onboarding wholesalers to enable their businesses during this period. Now we still are, and we're learning alongside them in terms of how they're going to be delivering to consumers for the first time. So I think by virtue of kind of that co-learning process, we've been able to, you know, share takeaways that some wholesalers have taken and share that with other customers that we have, and that's really allowed us to kind of learn at an accelerated rate and kind of be more experts in kind of this new market that is just being developed.
Dan, you must have been a big beneficiary as well of the pandemic, as I can't imagine that a lot of people went to dark car dealerships in person in the last few months. Tell us a little bit kind of what has happened, accelerated your development, and kind of how you think around the opportunity.
Yeah, I think, look, I think, you know, March, April of this year was a scary time for everyone, us included. You know, everyone was still trying to figure it out. So we weren't excluded from that, but I think we didn't anticipate everything coming back so quickly, and how much and how important cars would become in terms of a mode of transportation. The public transit ridership is down 80%. You know, Uber and Lyft ridership is also down. And when people start thinking about how do I get outside of the city or you know, to the outdoors a little bit, you know, I need a car. So we've certainly been a beneficiary of that, and our business is up, you know, 2x from the peak pre-COVID. So you know, certainly trying to continue to put fuel on the fire and step on the gas when it comes to continuing to increase our sales and our reach. You know, ultimately, we spent a lot of that time for us, you know, rethinking our product and making sure that we have a very seamless way to buy a car. We've started moving more towards the financial services component of the business as well, thinking about adjacent products and services that people want in addition to their car. I think the beauty about the car purchase, at least from a business perspective, is that, you know, the car is, you know, in many ways the first contact with the consumer. But in addition to that, there's consumer financing, warranty, insurance, parts and service, so many different adjacent things that the consumer needs around car ownership. And so we've certainly advanced that product roadmap. And then, you know, things like, you know, online instantaneous approval for your or pre-authorization for your credit, super helpful in getting people through the funnel. So kind of some of it is we've accelerated, you know, a lot of our plans to kind of take advantage of the market opportunity, and then, you know, really focused on the core product and the consumer experience.
And do you feel like all of the infrastructure was already there to just, I mean, it was basically more you executing the product roadmap, online approvals and stuff like that, credit rating, et cetera. Like, is that already there and you just had to build it yourself or build on top of these things? Or are you still waiting for core infrastructure to actually become digitized?
No, I think, I mean, there's a physical component to obviously car sales, which is probably the biggest constraint, but we can solve that relatively quickly. You know, unlike a dealership that needs, you know, very formal space and, you know, multi-million-dollar, tens of millions of dollar facilities, you know, we can rent a lot and put cars on it pretty quickly. So our ability to scale is relatively quick when it comes to the physical space. But, you know, the operations is probably where we need to spend the most amount of time in order to put cars through the funnel. And we take 360-degree photos, do that really quickly, and we can do kind of 10 at a time. How do you get to 20? How do you get to 100 in a given day, which is probably the biggest challenge. But ultimately, it's kind of all figuring out how to scale over the course of, you know, a very short period of time.
Thank you. Braden, perhaps you mentioned you were running out of inventory, which probably was a signal that you got excess demand very quickly. Tell us a little bit about the experience, what you learned from it, and how do you think about opportunities going forward?
Yeah, I mean, it was definitely a surprise, which in hindsight, maybe it shouldn't have been, but obviously I think everyone was in kind of a state of what's going to happen. Ultimately, so it's actually interesting. Something else I'll also touch on is we actually have a retail store in Vancouver. And so it's been interesting to kind of see how those two interplay. Online sales, like it's honestly not I mean, it's a great story, but it's the retail one might be interesting for people here. Our online sales did really well. We sold through a lot of our shoes and built a wait list, and now have a strong wait list and people, wanting shoes. And it pains me every email we get from an angry customer saying, I've been waiting for 2 months for shoes. Where are they? Like, why don't you have them? So that part, it forced us to think long-term about how can we rethink inventory, and really force us to think about, a negative cash conversion cycle. So, running things like pre-orders and pushing supplier terms back so that we can finance our inventory that way. From a retail perspective, it was really interesting. Our retail store pre-COVID did really well. We have a 35% conversion rate in our store. We have 3D printers set up, a sort of scanning station. It's a really cool experience for people, and we thought that was going to be a really strong channel for us. With COVID, that was pulled right out from underneath us. And I'd say what's been interesting now that we've reopened, so we had to close for about a month and a half, and then figure out a reopening plan. And now what we've seen is our conversion rate has actually gone up, and the traffic has gone down. But the people that come in are they have a very high intent to purchase. And so what I'm really interested thinking about is, like, we know COVID is going to be around for at least a year or two, and is going to have a big impact on retail. I think it'll have an impact on how people sign leases and how people think about the risk of going out of their house if it means that there's the potential of catching a virus. And so what we've seen is that people are really, really, they like having that experience. Like, people aren't just going around to window shop. They want to go in and have an experience. So maybe they've seen us online and then, want to come and check out our store in Vancouver. So that's sort of been, I think, the most interesting thing of how I'm thinking about COVID long-term is how is that actually going to impact the retail experience? Because I think that'll be a strong channel for us at some point in the future.
Yeah, I mean, it's kind of interesting around offline retail because almost every D2C brand has launched kind of an offline channel after kind of having scaled online. Right? Mm-hmm. And obviously it has been a little bit challenging in the last little while. At the same time, now with rents going down, it might become a really profitable, even more profitable channel going forward. Always assuming that kind of clients come back in enough volume to kind of support a retail store. But definitely interesting kind of to think through kind of what role offline retail will play in the future.
100%. And I think also combining your online and offline. So like we quickly rolled out curbside pickup. People have an expectation. There's no such thing, I don't think, anymore as like online, offline. Like everything is now omni-channel. And so, integrating all of those systems has become increasingly important for us and I think for all brands.
Do you feel like that all of the tools are already there? For example, when you launched kind of these curbside pickup, et cetera, perhaps even delivery options, like, do you feel like e-commerce infrastructure is there enough?
To a degree. So I think for like a standard product, I think that there's still some gaps that exist, but you can kind of like patch through different solutions. I think, and someone, I'm sorry, I'll read the name out. Someone mentioned LiDAR scanning. Sutha mentioned LiDAR scanning. And I think that we're on a very big tipping point for the customization of goods. And I think that's where there's going to actually be a very big opportunity for the direct to consumer sort of enterprise software space, because we have these customized goods or, customized parts of our product that we have to link with customers that don't plug into the sort of off the shelf solutions that exist. So we've had to kind of like go in and build our own sort of like solutions, integrating like part off the shelf, part our own software, kind of thing. So I think that's actually where we're going to see, as this wave of sort of customization comes through, I think that's where there's going to be actually a really big opportunity.
Saba, perhaps going to you next. kind of, did you see a hockey stick in the way that other, Shopify has seen a hockey stick effect, or was it more linear?
Yeah, so I mean, since COVID started around like February, March, like our growth has like pretty much doubled in a monthly basis in terms of like a number of traffic and sign up that we get. And it kind of makes sense because like when you look back, see like what happened in 2008 to 2009, as soon as something like recession happens, like anything financial sort of recession, like people start moving towards like more side hustle. They want to start making like some extra money on the side. And even if you see like companies like Shopify, Uber, they thrive during those times. Like what we do in the e-commerce space, we're basically enabling entrepreneurs and people to start their businesses online. And a lot of these people wanted to actually start their e-commerce store. And we basically were enabling them in addition to our partners like Shopify, Wix, which offer them the storefront, and we offer them product to sell. So that's been like, it's been a pretty good 6-7 months. We definitely have seen the hockey stick growth.
Want to ask everybody here on listening in, please post your questions into the chat, and we can ask them to the founders. Before we get there, I would love to just to the group and whoever feels compelled to answer, like obviously raising money from VCs wasn't as straightforward in the last 7 to 8 months, right? With Zoom meetings. Anybody had some experiences? How did it work out? The good and the bad and the ugly. Tell us a little bit. I don't know who went through a fundraising process, but whoever feels compelled, please share a little bit of your experience.
I closed a round on April 3rd, which was fun. So that's April 3rd was the
guy of the storm.
And then going through another process now. So I guess 2 fundraisers during COVID, which is, I don't know, maybe not the ideal way you'd want to script it, but look, I think the investors that we worked with kind of saw the longer term vision. That didn't really change, given everything that's happened this year. And I think the key and some of the best advice I got during that time was, plan for the longer term and, do whatever you need to do short term to preserve that runway, which is what we did. We were lucky that the market bounced back, so much faster than anyone anticipated. But we were ready to weather the storm for 12 to 18 months. So I think, credit to the investors that we did the initial round with back in earlier this year, stayed true to terms and closed on the term sheet that we initially negotiated in February. And then as we go through this round, people are, way more receptive. I think, before COVID, people thought that they had to meet in person and kind of shake hands, and that just has gone away. And so I think the norm is now, lots of Zoom calls and lots of follow-up meetings and calls, but I haven't found it to be that different than, an in-person experience. It just, frankly, is far more efficient, right? I can do 6 VC meetings in a day, whereas traveling around on, wherever you need to go takes obviously a lot more time. So in that sense, I think that in that sense, it certainly benefits founders.
Yeah, I mean, it's saying from the VC perspective, we have done about 10 investments since COVID hit. So we have fully transitioned to Zoom investing, and we're completely comfortable doing it. But it's interesting how
Boris?
Is it just Boris? Yeah.
I think it might just be Boris.
Oh no.
And
from
George.
There he is. There he is. We got you.
Broke up for about 10 seconds there.
Sorry.
Yeah.
Yes. anyway, I just want to say from the VC side, we have certainly transitioned, and many other VCs have so as well. So it looks like we're all virtual in all aspects, including fundraising. George Babu had two questions. The first one is, what consumer buying behaviors will still be there with us in 3 to 5 years? And secondly, what consumer acquisition channels, tactics are working in this environment? Whoever wants to take it, take either one or the other question. I think.
I can address the first one. I think the most interesting stat, and it's probably a little bit dated now, but I'm sure folks have seen this chart of e-commerce penetration going from 5.6% in 2009 to 16% in 2019. And then over the last, and this is probably from, call it June or July of this year, and that 6 month period, or the 3 month period since COVID, that's gone from 19% penetration to close to 28. And so, we've seen as much absolute growth in e-commerce over the last 6 months or 8 months than we had in the previous 10 years. And so I think that's just going to continue to stay, to continue to trend upwards. And I don't know what that number is over the last couple of months, but I'm sure that's just continued to trend upwards. And as people get more comfortable with buying, everything online, including large purchases, I think that's something that's going to stay in place. And if anything, that's accelerated the e-commerce adoption curve because we've been forced into that. I can talk about number two, but I'm happy to give other folks a chance to respond.
Yeah, well, I'll step in on number one as well, and then maybe we can all hit number two.
Yeah.
From a shoe specific perspective, it's been really interesting. I didn't think that we'd ever look at starting to manufacture slippers. But that's something where there's been a huge opportunity. If you look at like some of the slipper data, a lot of people are now opting for slippers because people are just working at home. And so, I'd say we saw that was coming. So we rapidly created a prototype slipper, and now that's something that we're looking at launching. I think that it accelerated this sort of athleisure space. People are now even more so, like you look at everyone here, most people are wearing, clothes that you wouldn't necessarily wear to a C100 event if we were all in a conference room. So I think that is going to shift and going to continue that way. It's going to be interesting to see what happens to kind of more formal apparel and footwear, but that's also very specific to my niche.
Yeah, but I think it's super interesting, kind of markets that, kind of nobody really looked at, or product lines that nobody really looked at as a priority suddenly become a super priority. And in the same way, others that had a good going business suddenly don't do that well. So I don't think many people are buying suits these days, right? Because nobody's going to be.
And then it's other things too. Like I bought a fire table at Canadian Tire. Someone needs to start a direct-to-consumer fire table company, and you will crush it because they're like out of stock. You can't find them anywhere. I called the manufacturer to like see how they were doing, and it's like there's an opportunity in fire tables for someone.
Anybody else on consumer behaviors that gonna stick?
One thing that I found really interesting with Freshline, and something that's fueled a lot of our kind of early growth here with the pivot, a lot of consumers now, in our experience, are buying types of food that they would have never bought before online. So we used to work with high-end restaurants like the top end, the kind of Nobus of the world, and now that those aren't really an option for people to get their high-end Wagyu steaks and their high-end Hokkaido uni, they're now going to the only places that have them, which are these wholesalers who are not used to selling to consumers online. I think going forward, and this is kind of a unique case to our niche, but I think a lot of consumers are going to be buying high-end foods online continually into the future, even though it's the first time they've really done so in history. So one anecdotal note for me.
Let's quickly talk about consumer acquisition channels and tactics that work in this environment. Who wants to go first?
I can answer that. So I talked a little bit about our experiments that we ran and the experience that we had in the past 7-8 months. Starting like February, March, we started seeing there was a drop in paid acquisition on Facebook and Google, but almost like 30%, which we figured it's the best time for us to like scale it as much as possible. But we thought that's going to be almost like 1.5 or 2 years sort of reduction in the cost of paid acquisition, but that wasn't the case. Like after like 3-4 months, it went back to normal, and now even gone higher than what it was. I don't know what happened, but like it doesn't seem that paid acquisition, especially on Facebook, is going to be the best channel, in my opinion, based on our experience. But we do like a lot of experiments for like many different channels, from content to YouTube, paid acquisition, affiliates, influencer market. Honestly, like the best channel has been the influencer market. Although it's a bit manual process, you have to build a relationship with them. It's like a sales process. Find them one by one, build a relationship, figure out like what's the ROI going to be. So you define how much you can pay them. But honestly, it's the highest ROI if you could build a relationship with like 40, 50 influencers, depending on your space. If you're in the makeup space, you want to partner with like 5-10 influencers. If you're in the tech space, you probably want to partner with like 50 to 100 of them. But that seems to be like the highest ROI so far.
Yeah, I can echo that same thing. Our influencer marketing is done really, really well. And I think you just have to be also, for us at least, as like a specific brand, it can sometimes be hit or miss. So you like have to make sure that you find people that are, I think, authentic to who your brand is, and just looking at engagement and a sort of handful of things. But influencer, I think, is definitely done extraordinarily for us.
Dan, you want to speak to that question as well?
Yeah, I'll be brief. I mean, our market is a little bit different than other folks in that, we've got a number of established destination sites, AutoTrader, eBay, and Kijiji, and Facebook Marketplace, and Car Gurus that people just kind of naturally gravitate towards before doing a Google search. So for us, those have been, our primary acquisition channels. They're incredibly effective, high intent to purchase. I think, as we continue to evolve, and we're starting to do more of this right now, is content marketing. I think when you're building a brand, particularly one that is trying to build that trusted relationship, the more kind of literature you can put out there, kind of dispelling myths about the industry, you can be viewed as a market leader. So that's another part of our strategy, is to really lean on content. But I think our market is a little bit different than maybe some of the other traditional e-commerce products.
We have a follow-up question regarding raising VC money via Zoom. Kind of what are key lessons have been learned? Dan, perhaps I think you have the most amount of experience on this one. Perhaps you can chime in, and I'll add a little bit perhaps from the VC perspective.
Yeah, I think for me, because the process moves, I would say, more quickly than the more face-to-face process, having all of your kind of ducks in a row, meaning your docs and your data room and all that stuff, and then really launching that process at the same time is probably the lesson learned there. Because if you wait a week or two, because calls can get scheduled so quickly, you start having people gap in terms of where they are in terms of process. You have folks that are way ahead of another party, which kind of results in this interesting dynamic that's hard to manage. I think that's one. And then two, I think there's a lot of kind of backroom diligence that these VCs will do. And so I get a lot of pings from my friends that say, oh, like this person pinged me because they want to know more about you. So I think there's going to be a lot more of that, because you don't have the chance to kind of shake hands, meet in person, and, grab a beer. So I think those are probably the two most, I would say, notable highlights that I've had. I mean, obviously there's more, but, those I found interesting and different than, obviously a more physical process.
I think great points. Perhaps just to add from our perspective and what we've been observing in the market. I mean, first of all, I think VCs are much more comfortable investing in people they met before in person, right? And that's why we've seen a lot of later stage rounds coming together very, very quickly. I might have passed on that company or kind of didn't win the deal before, but I know the person, really appreciate the person, and now I'm ready to move very quickly. Secondly, a lot of people have been more open to go earlier and kind of write smaller checks. And it felt like, Series A, Series B were the ones that were a little trickier, right? Because it feels like you want to really have some feeling for the person and the founding team, and you might not get that completely over Zoom. I think the two things to alleviate that is exactly what you said, like more reference checks, and for us also just spending more time with people on Zoom. Usually before it was probably in-person meetings, a couple of in-person meetings. Now it's perhaps more 4 or 5 Zoom meetings to really get to a decision, and just trying to kind of figure that out virtually. So, but it feels like things are working really, really well. And you know, despite, you know, kind of, I think people were a little gang shy in April, perhaps beginning of May, but since then it has really accelerated, and we're probably back completely to normal. Was everybody here on the call of the 4 founders, did you all run office-centered companies before and now digital-first companies, as in like you hire remote, or kind of where did you guys end up on hiring and where to hire?
Yeah, I can answer that too. We hired around 20 people in the past six months. So it's been, I mean, we never done it before. I would say like when like a year or 2 years ago, all I thought was that you're gonna build a product, run ads, and that's everything to run a business. But it's been like getting like way more complicated, from like building the team, growing the team, like all the policies that you have to put in place when the team start growing. So things start like shifting and change, especially when we pass like 30 people. But we were like a distributed team from the first day. We always had like 50-60% of our team remote. So it didn't have much impact on us, although we had our office in Vancouver, but it was only like half of our team in Vancouver all the time, and they were mostly working remote before that as well. So it was like a very easy shift for us, but like we started getting like a lot more growth and sort of partnership requests from the larger companies, and we had to grow our team. We just didn't know how to do it. We didn't have an HR team. We didn't have a recruiter or anything in-house. So that's some of the things that we did, from like hiring 2 recruiters and trying to build our in-house team. Started working with like 3 sort of agency recruiters in Toronto and Vancouver to just help us to get more leads. But yeah, but honestly, like it's been much easier to hire in the past 6-7 months. We're getting a lot higher quality candidates coming in.
Dan or Braden, anything to add?
Sorry, classic for a second. We ended up having a retail team that we had to let go. And I'd say the biggest and most interesting shift for us was just moving that from retail to really focusing on customer experience online. So we launched sort of like live scheduled fittings with customers, and you know, and then reopened retail. And we were fortunate that we were able to use a lot of those same customer experience people in the retail store as online. So kind of had some good sort of cross collaboration there. Other than that, like in terms of our online model, or like how we're all working together, it's been pretty seamless. Honestly, like our employees are all excited about it. Some of them are like, they'll go and work from Tofino for a week, or, you know, wherever. And I think if anything, it hasn't had a huge negative impact on our office culture. But we haven't hired 20 people like what Saba has. So I'm sure I'll be eating my words once we're doing that.
Yeah, the only thing I would add, because I think everything else is true, the one thing I'm certainly concerned and thinking about is the next year or two. If we can't meet on a regular basis in person, and if managers can't meet their directs in person and forge those kind of more human connections, like how do you create culture in that world? So very much, I think right now it's working and working fine. I wonder how sustainable it is, and that's something that's very top of mind for me.
Yeah, and we still have meetings every 2 days. We have, or we just like alternate between our tech and marketing teams, who kind of has the office.
Yeah.
Our retail, just for context for everyone, our retail store is actually in front of our office, which has been great because that's how we've managed to gain a lot of really great customer insight. You can like test messaging and test sort of value propositions on the fly and really get a good idea of what's resonating with customers. So
But yeah, I mean, that whole question, how to build culture in a digital first environment, how to hire at scale, all these things. I think every entrepreneur is trying to figure this out right now, right? And I don't think there's an obvious answer, right? I mean, there's even from the big tech companies, you have kind of companies like Stripe and Netflix that say like we want to go to fully back to office, and then you have companies like Shopify that say like, you know, we're really digital first. So I think very, very divergent opinions of what's going to work, and most likely people are going to figure out some hybrid models. But want to thank all four of you for excellent discussions and contributions. I think it was a fun conversation we had. I appreciate everybody coming out and listening in, and hopefully you took something away from these experiences of all four.